Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday.
Welcome to the latest episode of the Prime Property Finance Podcast with myself, Gareth Morgan. And this week we have a guest, Richard Sexton of HouseCheck. Richard is a very experienced property surveyor. He led eServe, part of LSL Property Services, which is a FTSE 250 company. And they are one of the major players in the surveying market for residential and buy-to-let mortgage valuations. And he's spent a long time there. And now he's moved on to a company called HouseCheck, one of the largest independent surveying and valuation chains across England and Wales. And they are known for their clear, practical explanations and strong real-world examples of property issues. So, without further ado, let's jump into it and understand more about how and why property surveys are so important in property investing. Richard, welcome to the show. Really excited to have you here.
Gareth, thank you very much for your invitation. I really appreciate it.
Yeah, no worries at all. So we've got a very exciting topic today, one which I know is very exciting to you because you've been doing it for so long, but we're going to learn more a little bit about surveys and valuations and various things. Do you want to just give our listeners a bit of a background as to where you are, how you've got to where you are and what you've been up to in your career and why we've ended up talking about this?
So physically, like you, I'm a Welshman. I live just outside Cardiff. Don't hold that against me. But I've spent probably 36 years in the property industry, mainly working for surveying businesses. And back in 1991, I joined a company which is now called eServe. It had a different name then, essentially as just an admin clerk. And over the years, held various roles there, mainly on the client relationship side, to be fair. And that was a great part of my life, great company to work for, really supportive. But about a year ago, got approached by a private equity company that was investing in another surveying firm called HouseCheck. Very different sort of organization, almost a startup business, if you like. So whereas eServe very much focus on the lender market, and they're very good at that. HouseCheck it's two things. It's a prop tech company. So in other words, they build software for surveyors, but also their target market, or our target market, I should say, is the consumer, so the private individual. And they're two very different things. And we'll probably get into the different reports that we provide for lenders versus consumers. And then, I was very happy there. And I'm still the commercial director of HouseCheck. But the company that approached me, who are a private equity company called Beach Equity, who had invested in HouseCheck, and that investment's really helped the business grow. Also then acquired at the end of 2025, a firm called Legal & General Surveying Services. So I was helping them with that process to some extent on the DD. And then they said, we need an MD now. So I kind of suddenly realized they were staring at me quite hard. I was looking behind me to see who they were staring at. And they said, we think you could fill that role, to which I was very flattered. And there is some logic to that. In terms of the synergy between the two businesses. So Legal & General Surveying Service, again, is a bit more like eServe. It's a kind of lender-focused national surveying firm. And HouseCheck, as I say, is the consumer. But there'll be some good synergies between the two. We might, for example, in Legal & General Surveying Services, use some of the HouseCheck software. So yeah, there's a happy path between the two there. Legal & General Surveying Services is probably a bit more specialist in terms of the markets they operate in. And I know that'll be of interest perhaps to some of your audience in terms of, investors and HMOs and those kind of things. So yeah, having at one point thought I might be slowing down, I've ended up with 2 jobs. So I don't quite know how that happened, but I am enjoying it.
It's a bit of a roller coaster of 12, 18 months then, from going to from a very established company like eServe, big player in the market. I'm not sure what the stats are, but I know they would do a large proportion of residential and buy-to-let surveys, wouldn't they? I'm not sure if you have the detail, but...
Correct, yeah. I mean, most lenders these days, as you know, have a buy-to-let offering, which they would almost consider as, just another vanilla product, if you like. It used to be more specialised, or people used to think of it as more specialised. But yeah, eServe do a big, significant proportion of their work would be investment-related buy-to-let valuations, and then the core product of kind of vanilla mortgage valuations as well. But most national firms can do that. What all firms don't do is the kind of more specialist end of the HMO market, and that's kind of a bit more of a niche for legal and general surveying services. But eServe, brilliant company, still got lots of friends there, and they're excellent at what they do.
So you've gone from eServe, who's a massive player, then you've gone into the tech startup kind of. Correct. It's a big shift in dynamic and culture, I would imagine. And now you're kind of finding yourself back on the road of a bigger, more established company. So interesting times.
Yeah, and hopefully the experience from both kind of lends itself to kind of helping the LGSS guys do the best thing they can.
Yeah, awesome. Well, sounds like you've got an interesting time ahead with putting both of those together and seeing how you can integrate both businesses. So do you want to just give us a bit of an idea of what HouseCheck is and the service that offers?
Yeah, as I say, it's focused mainly on the private individual, and they provide RICS kind of standard format reports. So our core product is kind of home buyers report, or level 2s, people call them. And that's a report on the condition of a property that will tell you, what you need to be worried about, if you like, in terms of which elements of the property are kind of at end of life and therefore might need repair or replacement. So it's kind of for the purchaser more than it is for the lender. And it helps you hopefully, well, 1, make a decision whether you want to proceed or not, and 2, go into that transaction with your eyes open. So that's the survey products that we provide. But HouseCheck is a prop tech organization, by which I mean there's lots of very clever software guys, much cleverer than me, that have developed the software that our surveyors and other surveyors use. So you might have heard of Quest, you might have heard of Cotality. If you're in the lender space, you have to have either or both of those platforms, because HouseCheck is just consumer facing. They've built their own ecosystem, so that's given them some freedom not to be perhaps constrained by those systems. And when I speak to surveyors, they love the HouseCheck software. They think it's very intuitive to use and a bit of a breath of fresh air, and they pay to use it. So that tells you all you need to know, I guess.
Yeah, interesting. So I'd just like to loop back to one of the things you mentioned around it being a level 2 survey, just for our listeners to understand. When you take out a mortgage, whether that be for your residential home or for a buy-to-let investment, generally, one of the questions you will be asked, what type of survey would you like? Now, there are three types, like you said. The first one, so level 1, is basically a valuation for mortgage purposes, and that's for the lender's basically your own purposes. And you may get a very short form, 1-page, if you're lucky, report on the property, but it's not going to go into any detail whatsoever around what the property looks like in terms of its quality and standard and makeup. A level 2 then, which is what you're referring to then, is a home buyer's report, and that's for the benefit of the buyer, not the actual lender. So the lender won't really have any interest in that. It'll be sent to the buyer, and the buyer will then get a pretty detailed and comprehensive, usually in a traffic light type setup, where green, nothing to worry about, amber, something to keep an eye on, and red, area of concern and something that will need attention. So you get a really detailed report on the condition of the property, and you can make some decisions on whether you still want to purchase that property after seeing the report, or whether it's often used as a room for negotiation on the purchase price if there's things that you weren't aware of.
Well, you've done it better than I could. Are you sure you're not a surveyor? But yeah, that's a very good summary.
And this comes from years of trying to explain the different levels. And then the third one is a full structural survey. There are differences between the home buyers and the structural survey. They go into a little bit more depth, but they are also quite restricted in their ability to uncover things which a lot of the time, the majority of issues aren't at the surface, are they? They are oftentimes hidden away. And when anyone who's done any sort of property renovations or refurbishments, when you start pulling things apart is then when you start to uncover some of the issues. A property of mine, a tenant had left, we were looking to make some changes to it. And then as they pulled the floorboards up, because there'd been a leak, we had changed the floorboards and the ceilings underneath, it uncovered that there was dry rot through all the first floor timbers. So we had to basically pull out the whole of the first floor. Now, these are the things that happen. And a report, I'm not sure whether a home buyer's report would have picked that up. There might have been some telltale signs potentially that the surveyor might have picked up. But ultimately, until you get into the real nitty-gritties, it's going to be difficult to unearth all aspects of a property. But it can pick up certain things, can't it?
There are very clear limitations to what the valuer, or the surveyor, I should say, will and won't look at. So if you are going to commission a level 2 or a level 3 report, make sure you're familiar with those terms and conditions, because there are instances where people come back and say, oh, you didn't find this, and it's not within, it's outside of the limitations of the report. And then they're disappointed that the surveyor hasn't found it, but they're not, they can't see through walls. And they don't typically drill through walls or do any kind of intrusive action. But to go back to your first point, what some people don't understand is that is entirely for the lender's benefit, and we're really answering two questions. How much is it worth, and are there any red flags that would make this non-mortgageable? So if it's in a flood area or substance area, things like that. But it is really quite a blunt tool for the lender to understand how much money they should lend you and whether they'll get their money back if they unfortunately had to repossess. So that's entirely for them. And as you say, sometimes they'll share info, and there's a tendency for some people to think, well, the lender's lending me the money, the property must be perfect. That is not the case. And that's why I'd advocate for private surveys, be it a level 2 or a level 3. Level 3, to be fair, is a rare requirement. So to get a level 3 report, we'd be advising people, if it was a listed building or very strange, unusual construction. But most people, probably 19 out of 20, the home buyers is the right vehicle for it. I think some investors who are more typically savvy about property will say, I don't need a private survey because I understand what the property is and the risk I'm taking on. But as I think you said, you can use that private survey if you've got a valuation, or even if you don't have a valuation in it, to negotiate and get a better deal on the property if you're still happy to proceed.
Yeah, I think some great points there. And I think that the number one, there's a couple of reasons why you suggest it, but one of the things that we, from a client perspective, clients would say, well, what would you do? And I say, well, I'm never going to advise you not to get a survey for starters. So if you're asking my professional opinion, you need to get a survey. Now, if you're asking me on a personal basis, I say, well, generally every property I bought, I have ended up getting a survey, because it gives me two things. One, it gives me clarity on what I'm buying, and that is really helpful. Almost, if you know you're going to be doing work to a property, then it just backs up your original opinion, and you can almost use that as a schedule of works to start pricing things against. But secondly, and most importantly for me, it gives you an opportunity to use it as a bargaining tool to try and renegotiate the price. And especially if there are things there that you weren't aware of when you viewed it.
You're sort of buying an insurance policy as well, because if there's something that we don't uncover that is within the spec of that report, then you do have some comeback. So that's the purpose of PI insurance, which all valuers must hold. So it is an insurance policy. I'd also say, if you're buying probably a very expensive property or asset for your investors, the cost of a survey, a few £100 is kind of neither here nor there in terms of the survey, the cost that you're going to save if you uncover a horrendous problem. And there's another reason I think increasingly why it's worth thinking about for investors is that lenders are increasingly moving to non-physical methods of assessing value. So you might have heard of things called AVMs, automated valuation models, or desktops. So in those instances, one, there might not even be a valuer or a human involved in the assessment. And that's great because it's really quick and it's really cheap and, it supports the customer experience. But you do need to think that nobody's ever actually seen the property. So lenders do have an obligation to tell people to get a private survey. They don't necessarily make a big deal of it. But if you looked somewhere deep in their terms and conditions, you would see there's a line that says you should get your own private survey. That's the UK finance kind of standard position.
Yeah, 100%. I would agree as well that this probably, and this is something that we can probably drift into in a second, is the difference between a survey and a valuation, which are very, very different things. And I know earlier when you referred to a valuer, you survey valuer, and it's just that little difference between the two, and people refer to them as both, and we do it. Experienced people in the industry, we do it all the time because it comes off the tongue. But there is a clear definition between the two, and that's the bit that people miss, I think, and that's a really important piece. And the other thing, just going back to that previous point, is having that clarity around what it is that you buy in, and the majority of times, we've had clients pull out the properties because of the results of the survey. Now, for me, that they've saved thousands and thousands of pounds by not buying that property. That it's worth it every time, and so, like you said, for a few £100, and the majority of the time, even if you just renegotiate the price of the property for the value of the cost of the survey, then it makes sense, doesn't it? So
I think if they're a professional valuer or surveyor, they'll usually be happy to talk to you before the inspection. So if you've got a concern, the roof looks a bit dodgy or whatever it is, have that conversation with the surveyor. And if the surveyor you're thinking of appointing doesn't want to do that, then I would say find another surveyor, because they all should do that before and afterwards potentially. So that's a kind of another pointer. And I think it's great to hear, you're a very professional organisation, and it's great to hear you're recommending it. There is perhaps a subset of brokers who are reluctant to recommend private surveys because they think that it's going to mess up their transaction. And that rarely happens. If it happens, it's for a good reason. We should all feel good about ourselves that we've protected the applicant. Usually what happens is that the applicant uses it to negotiate a better price. So it does change the process, slightly, but it doesn't kill the process in most cases. And
you're building good value and goodwill with the client, because if they do then pull out because of that,
yeah,
they're going to find another property and they're going to come back to you because they value your service. So
you're the guys who might have saved them £20,000, so they should be good friends with you after that.
Yeah, absolutely. So let's just jump into this in a bit more detail then. We're talking about survey versus valuation, surveyor versus valuer. Do you want to just kind of explain the difference between the two?
So most surveyors are valuers. That's the thing to start with. And that's why it's a bit confusing, because even ourselves, sometimes we say we're valuers and sometimes we say we're surveyors. They usually mean the same thing. But a valuation, let's do it that way, is just telling you what the asset is worth, basically. Not a lot more than that. This property is worth 200k. A survey is looking at the building pathology without sounding too stuck up about it. So how is that building constructed? Is it of sound construction type? Are there any obvious defects? And a surveyor will kind of do this thing where they follow the trail. So, these guys and girls they spend a lot of time learning about building pathology, and they might spot something, for example, on the front wall, which tells them there's a possible problem with the roof. So they follow the trail. So they go, right, that crack there tells me there might be something going on up in the roof space, and they'll follow that trail, and either they will or won't discover something. But it's just they're both equally valid. Both are needed, but they're different things. So you just need to make that decision about what you're getting, in full knowledge, is essentially. And of course, the other point is that most lenders will select the valuer from their panel. and that's a kind of risk process because they want to make sure of a certain quality. You have much more free reign when you're considering a private survey. You can choose anybody as long as they've got the right qualifications.
Yeah, so I think very, very valid points, and I think the survey side. So let's go with the valuation first. Then the valuation on instructed when you submit a mortgage application generally for a purchase, whilst they are done for remortgages, you already own the property. So for the purpose of this, we'll talk about purchases. And when you submit an application to a lender, they will, like you say, instruct a valuation from somebody on their panel. Now, in general terms, that may be free, or there may be a small cost for that. The reason being, they've now run this process where there's an element, might be a fully AVM, so that's an automated valuation model. So it takes in lots of data from lots of different places, sold price data in the location, the property type, the property construction, how many bedrooms, and all this other data that it feeds into the model to come up with something. Now, that can be accurate, but it can also be, we've seen them be almost accurate to the pound, and then we've also seen them be out by thousands of pounds as well. So you have to take those a little bit with a pinch of salt. And like you said, it doesn't, if they are doing a purely and not an AVM model where there's no physical visit by a valuer to the property on a purchase, that does raise some red flags for me. Now, it's great from a mortgage perspective, but as a buyer, I'd want to know that somebody else is going to the property to inspect it, to sense check. Am I buying something that am I paying the right money for this property?
Yeah, and you might think, I would say, don't, AVMs are the devil. They're not. They are. There's definitely a place for them, and they're very good at valuing standard properties. They're not great at, a castle in the middle of Wales, for example. You wouldn't get a lender, hopefully, using one of those for that kind of property. But yeah, it is. The other point to consider is that an AVM will be run on the assumption that the property is in average to good condition. So, and that will be the lender's choice. So the lenders will, and sometimes with the help of panel managers, will say, in this pot, this is a low LTV application. It's a standard property on, a street in Reading or something like that, that we're safe to use an AVM, and they will do for their purposes. There's a kind of halfway house, which is a kind of assisted AVM, if you like. So we, with my LGS hat on, we offer a service where the AVM is produced, and if the lender isn't entirely comfortable or the confidence is not where it should be, because they usually score themselves, they'll put that in front of a valuer and say, can you validate this as a value? But again, importantly, we're not going out to look at the property. We're just doing exactly the same thing, saying, assuming this is an okay to good property, I can endorse that valuation or not, as the case may be. And then you've got your full mortgage valuations. And, you've got lenders who are openly talking about doing 70% plus of their stuff non-physical, which is great, streamlines the process. It just re-emphasizes, though, that is for their purposes. And if you're an investor, you need to think about whether you're fully protected when you're making that transaction.
Yeah. And then moving from the valuation side of things, and so can you said that all surveyors are valuers. Are all valuers surveyors?
No, that's a really good point. So I'll make a generalization. Probably 90% of qualified individuals who support lenders are both. They can do mortgage vals and they can do level 2 reports, most of them. Some choose not to, some prefer to do one over the other, but not all surveyors can do the level 3 building survey, because that's a kind of a higher spec report. So again, if you were trying to find the right individual, I'd be asking questions about, how many of these have you done, whichever one it is, whether it's building surveys or level 2s. But I mean, to be fair, it's not an issue. Most companies will say, hey, we don't do that. So they'll self-exclude.
Yeah, and I think there's also a piece here on the estate agent side, isn't there, where you have in the estate agency world, and this is definitely not me, I'm going to go to estate agents by any stretch, it's just it's a truth, isn't it? You've got estate agents, the public would say, I need a valuation done on my house. And the first place they would go is to an estate agent, generally. And so they'll go to an estate agent to get a value on their property. And that value, if that person isn't RICS qualified, because not all estate agents are, that value isn't necessarily correct, is it? I think. And so some estate agents aren't RICS qualified and some are, in which case, to hang your hat on that valuation, it needs to be done by a RICS qualified person.
Yeah. Look, estate agents are an important part of the property transaction, and there's probably a bit of a love-hate relationship sometimes between agents and valuers. But again, what you're getting when you approach a estate agent is a marketing value. So what should I put my property on the market for? Doesn't mean that's what you're going to sell it for. And if I was being mischievous, there's not a lot of disincentive for some agents to get the instruction by being optimistic, should we say, in the figures that they give them. So again, there's no criticism. It's just a different process that is being applied. And we do get a lot of traffic from agents who sort of suggest the valuer has downvalued the property. And that's always a good, fun conversation to have. I always say there's no such thing as down valuations, but there's lots of overestimates. So that debate will go on till I retire and beyond.
Yeah, and beyond. You'll carry it with you to the grave.
Be on my gravestone, yeah.
So go on then. You brought it up, the down valuation word. So let's talk a little bit more about that then, because in my experience, like you said, there's a number of ways that people approach this, and obviously, and then this is more what we've been talking in the main around surveys, and that's more focused around purchases. Down valuations, I see, are more of a topic around remortgages than they are on purchases. And so there's a slight nuance, isn't there?
There's a good reason for that, and you're absolutely right, Gareth. So down valuations or overestimates, whichever we want to call them, are rare on purchases, is the truth. And they only occur if the valuer, surveyor, uncovers something which will impact on value. And the reason why it's rare is because it's an open market transaction. You've got a willing buyer, a willing seller. It's like if I was trying to sell you my car and I say it's $1,000 and you say, yeah, I'll pay you $1,000. That's the value of the car. There's no debate about it. On remortgage, it's a bit more of a hope figure that is produced and provided to the valuer, because it's more driven by, I need to get access to a certain product, a certain LTV. And obviously LTV is driven by the valuation figure. So, there's a temptation. I'm not saying everybody does it, to just put in a higher figure just because that kind of covers any subsequent. It's a kind of endless circle of conversations.
So, and this is the game that we play, and this is, we have this conversation with clients all the time, and it'd be good to get your steer on this, because we do a lot of people. I think I mentioned to you that in the space that we're in, we work a lot with investors who are buying properties at auction, are buying rundown properties. So their model is buy, refurbish, or add value by adding planning or whatever, and then refinancing at the higher value. So that the very nature of their transaction is trying to maximize the value of that property or asset in order to then recoup as much of their funds as possible so they can go and do it again, which is fine. That's their business model. Now, valuers come in the way of that often. And the conversation that we would say to people, and ultimately they're just doing their job. So it's not they're picking on you as an investor and they're really out to get you, because that's not the case. Well, your goal as an investor is to maximize the value of this property. And the role of a surveyor or valuer is to come in and on behalf of the lender, give a true market value, an independent opinion of what that property is currently worth. Now, what the conversation that we have with people is, right, what do you need out of this? So let's just keep the figures really simple so that everyone can follow. If you purchase a property at auction for 50K and you've spent 25K on it and you think it's worth 100K, right? So you're all in for 75k, and so 100k valuation will get you all of your money back out on this property. What some people are going, well, let's put it in at 120. Well, the chances are, and this is an open, me thinking out loud and talking about basically the conversations that we have, is, well, if you only need 100 to get all your money back out, then just put it in at 100. And, because if that's close to the value, you've got more chance of getting that accepted, because it will be within a certain tolerance of where the market's at. Now, if you go in at 120, which is way over and above, and it's a hope value, and you haven't really got any comparable evidence to back it up, then a surveyor might then bring you back down to what they see, which might bring you lower than the 100, because you're so out, they're doing an independent view of it, and they might bring you back at 95 or something, or I don't know, and then it brings you back below what you needed to be. It's just that dynamic, isn't it? It's a game of cat and mouse, isn't it?
There's a few things there, yeah, absolutely. So one, valuers, they can't help but notice patterns. So if a particular broker, I know you guys wouldn't do it, constantly just throws in ridiculous figures, actually all it does is undermine the next one that the valuer sees, because he goes, oh, it's Richard, he's probably put 50k on it. So it doesn't ultimately get anywhere. You're just kind of creating a bit of tension in the conversation. The reality is, it's pretty easy to work out what a property's worth, even if you're not a professional, valuer or surveyor. There's so much data available out there. So don't travel in hope. Do your research and understand what it's likely to be before you submit the application. And then my last point is, again, for understanding, in that transaction, we are protecting the lender's interests. So lenders never say, slash 10% off everything. That's another myth I sometimes
Yeah, we hear that a lot. Yeah.
If you could find that written down somewhere, you'd have a great story, but it's just not true. So that doesn't occur at all. But we're representing their interests, but also, and this might wind people up, but we get paid either way. If the transaction goes through, we get paid. If the transaction doesn't go through, we get paid our survey fee or valuation fee. And that's for good reason, I think. It's because the lenders are looking for that arm's length advice. If it was dependent on, if our fee was dependent on us valuing up, that would drive completely the wrong behavior. So we're a disinterested party in that transaction, probably one of the only few, actually, because everybody else is kind of dependent on a certain outcome to get paid.
Yeah. And this falls into the risk of, from a lender's perspective, and maybe this is just to help people understand why this is the case and why more loan to values occur rather than why down valuations from a risk perspective for a lender, is on the residential side, anything, they'll lend up to 95%, but it's a regulated transaction. It's the home that you live in, and you will do anything and everything you can to repay that mortgage because you don't want to lose the house over your head. And generally, those mortgages are on repayment. So over time, the value of the loan is being reduced. So the majority of buy-to-let, not all, but the majority of buy-to-let mortgages are on interest only. And so if you take out a 75% mortgage, you're not actually repaying any of that debt. Then the bank has left some wriggle room in there for market changes. So we've seen during recessions, property prices slash 10, 15, 20, 25%. So there's a wriggle room in there. Plus also they need to cover costs if they do need to repossess, that costs to market the property's empty, legal costs, and various other costs, professional fees to get their money back. And all the lender wants to do is get their money back if they need to repossess. And they don't want to repossess because it's headache for them, it's hassle, it's cost. And so that's why they have those in there. So all you're doing as an independent surveyor, a valuer, is ratifying these values to protect the lender's interest, isn't it?
Yeah, completely. And you summarized it really well. On a buy-to-let case, it's a different calculation for the lender as well. On a purchase, as you say, it is this property worth the right amount of money, and can this person afford it in terms of the mortgage? there's another consideration on buy-to-let and investment, which is, does the rental income stack up? So it's a more complicated calculation, but one that lenders are increasingly automating.
Yeah, and the other thing that we have then when we talk about valuations, and this is a frustration for us from a broker perspective, is, when we go through our fact-finding procedure with the client, we'll say, right, first question, what's the property value? What's the address? What's the property value? And, how much do you owe? How much are you looking to borrow and various things. But we are governed by what they tell us. And so if on that example that we said earlier, if they come to us and say the value of the property is 130 grand, who are we to argue? It's not, our job isn't to value the property. We're not valuers. And so if we'll sometimes do a quick sense check, but that's not our job. You as the property owner at that point, you have an element of responsibility yourself. And people, this is where we get frustrated, is that people expect everybody else to do everything else for them. You've made an active decision to become a property investor or developer, whatever it may be. If you have work to do, and so finding out the value of your asset is part of your due diligence process. You need to go away and find comparables and come up with a realistic value, speak to agents in the location and see what the sold comparables are like. And then you come to us, and if that says it's 110 or 100, then so be it. But it's not just because we sometimes get down valuations post-application, and we said, you got the valuation wrong. Well, it's not our valuation, it's the one that you've provided to us. And so that can be a bit of a bugbear at times where people are not spending enough time up front, and then that's throwing out the application because of loan to values and minimum loans and affordability and various bits.
Yeah, it's certainly in their interests, isn't it? Because you're just kind of deferring a problem to later in the process that will mess up the transaction later on down the road. And there's plenty of online tools you can use, Zoopla, Rightmove, places like that. They'll give you an estimate for nothing, or you can pay for a very quick and dirty AVM, and that might be 20, 25 quid. So there's plenty of information that will help manage investors' expectations from the start, rather than just being super optimistic and ultimately then spending money on a transaction that doesn't go through.
Yeah, absolutely. So in terms of, I guess, we're moving into the tech world now, and property is very much a bricks and mortar. It's solid, isn't it? That's why people like it as an investment, of course. But then there are parts of the process which have been systemized and tech has been brought in to help support that. I think one aspect that could really do with some shaking up is the legal aspect. I think I'm still miffed. I think the whole conveyancing process in the UK or in England and Wales is just a mess, and one that could be really streamlined. What are you seeing? What aspects of the industry do you think have come a long way under AI and tech? And is there any areas you think that still could do with improvement? And
Yeah. So I agree with you on the conveyancing point. First of all, it's a very fragmented industry, and one which is commoditized, probably driven to some extent by the lenders. So you kind of get the service that you pay for. But there are plenty of smart people in the conveyancing world that want to use technology and have begun to. Definitely, there's a logic behind more interaction between valuers, surveyors, and conveyancers. That probably should happen earlier in the process. And if the material information legislation goes through, or the form of it, that could be really good, both for the industries, but also in terms of the experience of the process of the purchaser or the investor. In terms of tech and AI, everybody's talking about AI, and it's easy to get a bit overexcited about it, claiming it can do everything, wash your socks for you and drive your car and all those kind of things. But in the real world, in House Check, we're using AI to improve the quality of our reports. So the surveyor will write a report, and almost in a live kind of environment, he'll get feedback. You could have worded that slightly better, and the AI will score his report in terms of clarity. and make suggestions, but two, if there's a consistent scoring issue, that will then generate kind of training feedback to the valuer to say, you don't describe roofs in enough detail, to give you a boring example. That's a way where AI can make a difference. And AIs will make the AVM kind of stuff even more powerful. Although I think for your viewers and your customers, it will have less of an impact, because I think lenders will tend to want to stick with a valuer's or surveyor's advice more often on HMOs and MUBs and more complex. So I think our industry is changing, and we've got to accept that some of the easy, inverted commas, stuff is probably going to disappear from our world, that we're not going to, jobs that would have been done by physical measures are no longer going to be done by physical measures. So we all need to make sure we can do the more specialist stuff, because that's where the physical vals will persist.
Yeah, awesome. I don't see, like you said, anything changing to this aspect of it. And that goes for the legal process as well on the more complex side of things. I think it's the straight, easy remortgages, residential remortgages and things like that, isn't it? That's where the quick wins, that's the volume stuff, isn't it? And generally things which are pretty more straightforward. So yeah, interesting stuff. Anything else you see going on in the industry? What's your overall thought about, obviously, the property investing market? There's been, obviously, landlords and investors have had a hammering, continue to do so. How do you see that? Is that the reality? Or are you seeing, still plenty of demand from investors?
So there's a couple of different questions there. And yeah, from a government perspective, there's been some definite policy decisions which are anti-landlord, you might call it. But I know from talking to lenders, they still see the sector as very important, essential, probably. But also there's a reason from their commercial point of view, which is that it's quite difficult to make a good margin on a vanilla mortgage. Whereas more specialist stuff is where they're all migrating to. So even if it's only from a degree of self-interest, lenders want to support the sector, and lenders are shifting into more complex areas than they previously wouldn't have done, because they're kind of fighting for their market share. And we saw it, I don't know, probably 10 years ago with new build. There was a point where some lenders were, I don't want to touch new build, that's too specialist for me. And now they all do it. So it's a bit of push and pull. I think the legislative environment hasn't been great, but is the sector dead? No. When I talk to lenders, they expect it to be busier as a sector this year than it was last year. I think last year was dealing with the shock of the changes, and this year's, people are very good at finding their way through things, aren't they? And you've seen a shift to kind of limited companies instead of individuals as the owners of the property. So we'll find a way through. So I don't think it's a long way from being dead, and it's a sector that lenders are really keen to get engaged with.
And I think, like I said, I've mentioned this before on other episodes, is that people, the landlords are leaving the industry and they throw. So I'm like, well, there's an element of that which is natural. If you look at any industry, there's a number of people leaving every industry because they're retiring, and so yes, there are landlords leaving, have more left because of the changes, probably more than your average industry. So yes, there has been changes, but there is also plenty of people coming in at the front end who know the rules of the game, who understand, right, it needs to be a limited company, and this is what's expected of the condition of the property, and this is expected what's, prescribed information they have to give at the outset of a tenancy and various things. So people know that it's to them, it's not change. Whereas for older landlords who have been in the game a long time, who have had low interest rates and very little regulation, there's big changes, in which case the change is too much and now I'll just get out.
I've got a very good friend who's got a portfolio of properties in South Wales, funnily enough, and he has sold a few, maybe, I don't know, 5% of them, but he's also acquired. So he's just optimized his portfolio. So he's got rid of some stuff that's has become more marginal, but actually he's replacing those with other properties that they do work on paper. So perhaps I'll give him your number. I'll give him a customer.
Yeah, absolutely. Look, we're welcome to talk to anybody at the end of the day. We're very, very interested in investing, and just we're all, the property investing industry is quite a quirky one where everyone seems happy to help each other. There's enough business to go around and there's enough properties out there. And, if we can all help each other learn and grow and develop, then the industry will be a better place for it. So yeah, that's half the purpose of this podcast, is to try and help people understand the importance in this instance of getting a survey done in the property, because, you're giving yourself so much protection by having it done. Like I said, it's worth doing, isn't it? And
yeah, I'll go back to my car analogy, and this would be something a lot of people would recognize, maybe not everyone, but if you're buying a new car, you will quite often get the AA guy out to give it a once over before you buy it. And so people are very comfortable to do that. Yet sometimes the same individual doesn't see the value in, the biggest asset they're going to buy ever, and they still don't get independent advice. So it's a bit of a quirk in the market, and it to some extent has been driven by lenders saying, oh, well, we'll do a free valuation. Whether it's free or not is debatable, but so you don't have to worry. And people have misunderstood the kind of mechanism, and that's where we started, isn't it? The difference between the different approaches.
And ultimately, property is, for the majority of people, there'll be the odd people in the higher brackets, but property, of whether it's your home or an investment, will be the most expensive things you buy in your life. And so to spend a couple of £100 to get the sense check over, from experienced people who've been doing this for a long time, who do this day in, day out, to spot risks and factors that might telltale signs, it's worth every penny, in my opinion.
It's peace of mind. And it's, as I say, if I go back to the PI point, it's kind of an insurance policy as well, because if we miss something we should have found, then we expect to receive a claim. And, that is a component of the market, but it gives you a little bit more reassurance, I guess.
One of the news pieces around is how PI impacts surveyors specifically, and the cost of their PI cover, which is why historically there's been a bit of a shortage of surveyors and their ability, because of their ability to get insurance. What's your experience? Are there many claims, and how, can you give us an example of a claim that's been had and how that was paid out what led to that event?
If you're a valuer or a surveyor, there's two types of claim you can get, basically. One is a valuation claim, and that usually comes from the lender. So, you told us this was worth 200K, we've repossessed it, it was worth 150K, and then, there will be a discussion about that, the 50K difference, and that's what the PI is there to kick in. They are, thankfully, very few and far between at the moment, because the market's been benign. If I go back to 2008 and 2009, that was kind of cowboy territory, and everybody was suing everybody, and it was horrible. Defect claims are kind of almost a BAU element of any surveying business, and I'm not saying that in a flippant way. People are human, and they will sometimes miss something that, in retrospect, they should have spotted. So, again, if they're a professional organisation, they will have a complaints process that you can follow, and typically PI claims don't actually get to the insurance policy, because the valuer or the surveyor will sort of say, I can see we made a mistake, the cost to rectify the mistake, fix the roof, whatever it is 10K, we'll settle with 10K, and there's a negotiation process. So the claimant might say, well, I need 20 grand to fix this roof, and we'll go out and assess it and say, well, we think we can get it fixed for 10K, and you do a bit of reasonable professional horse trading, and you end up with a figure that both people
equally unsatisfied with.
Yeah. Not that you're ever going to be satisfied because something's gone wrong, but it does go wrong. Like in every industry goes wrong, but that's what the PI insurance is there for. A lot of valuers, as you say, were pushed out in the market because the premiums after the last financial crash just skyrocketed. And they've also rocketed for reasons that are nothing to do with the property market. If there's a hurricane in the Caribbean, guess what? The insurance premiums get loaded so they can recover that as well. But relatively, if for a surveying firm, the market is much more benign, and PI costs, the cost of buying the policy, have come down. And if they're a professional organisation, as I say, they'll have a process that handles any alleged omissions in the report and does so, promptly and independently. And there's always a property ombudsman as well, which you can refer to. So there's lots of kind of structures in place that should give people peace of mind that if it does go wrong, there's a remedy for it.
Awesome. Well, thanks, Richard. Really appreciate it. And do you have any sort of, appreciate your time? Obviously, you're very experienced within the property surveying space. And obviously, you've new venture now, which it sounds very exciting. And you're going to bring that tech into it. So have you got any sort of final comments on things around, I guess, the final pitch, I suppose, as to the importance of why someone should, get a survey?
Yeah. So I'm not going to do a sales number, but hopefully I've made a reasonably convincing argument of why it's probably a good idea. The reality is maybe 25% of people get a private survey. And I would say to your viewers and your customers, be in that 25% because you've got that additional peace of mind. You can go forward on your transaction in full knowledge of what it is you're actually taking on as an asset. And you've got that protection I just talked about in terms of the PI arrangements as well.
Yeah, I think to back that up, I think on my personal home, every time I've bought my own home, I've 100%, I've had one done. And every time I've negotiated more than the cost of the actual survey. So that's a point to that. I would say on from the investment perspective, I probably haven't done it. I had it done every time. I think we have had them done, but I think we've just chosen, depending on the property type, what we're going to work on. Some things are easy to see that you can tell that, well, that roof clearly needs replacing, so we're going to replace it. So it's not a news item really. But again, the times that we have used it, they have identified things that we weren't able to see to the naked eye, and that's with experience as well. So yeah, 100% worth doing.
Great, I'll get you into our marketing team, Gareth.
No worries. No, but it is super important. Like I said, and we've had a number of clients who have actually had them done and then pulled out of the purchase, and they were very grateful for having that advice.
There are some horror stories out there. I won't scare people, but yeah, you can imagine why I think it's a good idea.
Definitely. Richard, if people wanted to get in touch with you to contact you to get a survey, an independent survey or anything like that, what would the best be for them to contact you?
You can come to just either go to the HouseCheck website, which is housecheck with a Z, housecheck.com, or if people want to talk to me or approach me, my email is richard.sexton, SEXTON, @housecheck.com.
Perfect.
Be delighted.
Thanks, Richard. Appreciate it. And wish you all the best and speak again soon.
Cheers.
Thanks for listening to the latest episode. Hopefully you had some value from that. Richard is clearly very experienced in the surveying and valuation world. And hopefully you've really understood the difference between a survey and a surveyor and a valuation and a valuer. And like I said, a number of times, the importance for me personally is huge in making sure you get an independent survey done of the property that you're looking to purchase. You can save the money back in the fees. It is really a no-brainer. Plus, as Richard mentioned, there's the ability to use it as a bit of an insurance policy in case the surveyor's got something wrong. So it's of huge value. I highly recommend that you get a independent survey done if you do buy a property. And like I said, also you can use that as a means of a schedule of works to carry out and price against those issues when you're trying to do your due diligence on the property. So yeah, hope that was good. I look forward to seeing you on the next episode. As always, if you enjoyed it, please share, like and subscribe and pass it on to anyone you know that might be buying a property anytime soon. Thanks so much and see you on the next episode.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.